You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan, a plan to save you money. I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, we're celebrating today. I don't know if we want to do this one or not, because this one could be a little, well, I guess we do controversial stuff on Ron Siegel Radio. Today's National Aviation Day. So would somebody please make sure the door's closed and attached? And, you know, it's kind of crazy when you think about how safe they talk about flying, yet mechanical troubles on one of President Trump's flights, mechanical problems on one of J.D. Vance's flights, and we've got astronauts stuck in space. I'm not sure that I want to get off the ground. And I'm just throwing that out there. I guess maybe I could. National Potato Day. Now, you can tell Josh has little ones. Okay, you got Mr. Potato Head. Of course it is. But national, that's a reference if you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 FM 98.1 video feed. So we got Mr. Potato Head on it. National Potato Day. You know, I didn't know. I had to debate. I didn't know whether we should go with a question of, you know, what's your favorite kind of potato? Twice baked potato, French fries, mashed potatoes, with like scalloped potatoes. There's a lot of them, and there's not a whole lot of them that I don't like, but that's a whole different story. So, okay, what's your favorite potato? And today's also National Soft Ice Cream Day. Okay, now I don't know about this graphic, Josh. Blue ice cream? I haven't seen that one. Okay, I don't know where you go to even get that. I was at a conference a couple weeks ago, and believe it or not, I didn't even realize that they have them in California. But over in the Tustin Marketplace, there was a Dairy Queen. Now, is there any better place to get soft ice cream than Dairy Queen? I don't even know where you go to get soft ice cream. So our question of the day, I think we got a question of the day. Where do you go for the best soft serve ice cream? Now, I know that a lot of members of my family are going to come up and they're going to just throw it right out there. They're going to go to McDonald's. I can't say that one's a bad one, but where are you going for the best soft serve ice cream? McDonald's is probably the most convenient of all of them. Where do you go? What is your favorite flavor? Although, you know, I did, when my dad was alive, he used to like going to Wendy's. I don't know if that's called soft serve, those malts that they have. It's a Monday morning and I'm drooling already. Okay, so let's move right along. Let's see what the markets are doing today. They just blocked my screen. Dow Jones Industrial Average is up 145 points. The S&P 500 is up 20. The NASDAQ is up 55.86. Oil down 73 cents a barrel. And the 10-year Treasury down 2.7 basis points, 3.858. Now, that Treasury is not going to be doing a whole heck of a lot just because, we're on watch. We're waiting. It's the end of summer. I know a lot of schools have gone back, but, historically, this week and next week, we're basically, all the traders, they're gone. They're at the end of summer, they're going into Labor Day, they're going into the long weekends. What does that mean for you? Why do I even bring that up? Well, when the traders are all gone, that means we're going to get a lot more volatility in the markets. And if you read our market commentary this morning, and yes, you can get it for free, rsrmarketminute.com, rsrmarketminute.com. We did note in there that we're waiting for the personal consumption expenditures. That's the Federal Reserve's favorite measure of inflation. We've got another employment report that's due out. And then we've got, the big one, all of these folks from the Federal Reserve. Yeah, my thoughts there.
Such an idiot.
Yeah.
Such
Okay.
an idiot.
So they're all going to Jackson Hole. They have this real high-end conference there. And every once in a while, we get policy changes that come from the Federal Reserve in some of their comments and their speeches when they're at this Jackson Hole meeting. Will we get any this time? Well, you can almost always count on us getting advance warning when they're doing these things. Where do we get the advance warning? Well, it comes from the Wall Street Journal's Nick Timiraos. Every Federal Reserve chairman has somebody that the market sees as the mole. And what do I mean by the mole? Well, the Federal Reserve doesn't like to spook the markets. They don't like to shock the markets. Markets hate uncertainty. And if the markets get a message that they aren't expecting from a major source, Federal Reserve or Department of Treasury, if the stock markets get any of those things and they get surprised, they can start reading into the messaging. So how does the Federal Reserve share data yet not surprise anybody? Well, there's always a mole. Nick Timiraos at the Wall Street Journal is the current mole. So if you see an article that comes out from Timiraos, you can almost guess that he's got information. He's relaying information that somehow the Federal Reserve wants to get out there, yet they don't want to be the direct source. So Timiraos is the one that has come out, and if you watched the last Federal Reserve meeting, almost before the meeting was over, I mean, the chairman probably hadn't even got out of the meeting rooms yet. Well, Timiraos had a clarification article posted on wallstreetjournal.com. So it's kind of the way things are. You just have to understand these things, and we do. So the markets are going to be kind of quiet. They're going to go on vacation the last couple of weeks. It's pretty common. They used to do this. Why did the Congress and the president always go on vacation for the month of August? Well, it all started out way, way back when they all wanted to get out of Washington, D.C. because it was too hot. They didn't have air conditioning at that point. For some reason, even though they've got the air conditioners now, they still think they need to be out of Washington, D.C. And we're not going to see a whole lot going on in D.C. anyway, because this week is the Democrat National Committee convention in Chicago. Hopefully, it will be a safe place, but we'll see what happens there. Chicago can be a pretty tough place, and they're already down about 1,200 law enforcement officers there. So we'll be watching that for you. We'll give you any reports that we have and any news that comes out from a financial standpoint. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we're going to talk. We've got a lot of items to talk to you about. One of them that I'm going to really get into today is understanding why you're seeing different numbers in mortgage rates. Why is it that you'll get a message that comes out and says, mortgage rates hit 6.5, or whatever Josh is going to tell me is the number from Friday when we come back. But why did the mortgage rates hit those numbers? Yet when you go to get quoted a rate, that's not the same number that you're quoted. So we're going to talk about that, why it happens that way. Yesterday, or Friday's number, if you're watching again, we put this out on all of our data. 6.478 was what a 30-year conventional loans were Friday, according to OBMMI, and we'll give you all their disclosures in a minute. Helpful negotiation tactics for today's housing market, how mortgage rates change impact your home buying power, what credit score do you really need to buy a house, and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We will be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less? All without having to spend more each month than you spend right now. Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at RonIsMyLender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037. RonIsMyLender.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. 1990, the Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products You just need to make the call, 800-306-1990, 800-306-1990, and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or APR. They give us the number you need to put into your mortgage calculator to find out exactly what your principal and interest payment will be. And if you don't have a mortgage calculator, ronismylender.com, ronismylender.com. You can get our mobile app, and that does give you a mortgage calculator. And if, by the way, you wanted to apply for a loan, it's got the loan application on there as well. But the mortgage app does not require you to do anything. It doesn't cost you anything. You put the numbers in there. So let's take a look. What did loans lock at on Friday? That's the latest data available. 30-year conventional loans, they were down 6.478. 30-year jumbo loans, they were up 6.874. FHA 30-year fixed rate loans up 6.315. 30-year VA loans 5.871. They're down. And USDA 30-year fixed, that one was up 6.461. That's for our rural areas. Generally, no down payment on the USDA loans. There are other restrictions that do apply. And as we mentioned earlier, if you want our market commentary, our thoughts about the market, we usually get that out as early as the data allows. rsrmarketminute.com, rsrmarketminute.com. It is free to you. So all you have to do is go in there and take advantage of getting that thing and enjoy it. Again, you can use it however you wish. Let's see what the markets are doing today. That gave you the data from yesterday, but let's see where today's data is. S&P 500 is now up 22.42. 10-year Treasury down 3 basis points. And the mortgage-backed security, that's up 13 basis points. The bond is up, which means the rate is down. It's mathematics, so it's not a question mark. It is just straight mathematics. So the bond yield on the 10-year Treasury is down 3 basis points, and we've got the mortgage bond itself. Anybody want to know where mortgage rates come from? Some people want to think that it's the 10-year Treasury. Well, that's just because it's easy and that's readily available. If you have to look a little deeper, it's also readily available to find the mortgage bond, but that's what we're working from, and that's where mortgage rates legitimately come from, is the mortgage bond. What's driving all of this, though, is they're all heading, as I mentioned, heading off to Jackson Hole. And let's take a look and see what we've got to say here. What's going to drive all this? Stocks mixed. Bonds are slightly higher to start the week. 10-year trading, again, as I mentioned to you, 3.87, remaining under the 3.92 resistance level. Looking at the charts, there's ample room for bonds to move higher and for yields to move lower in the coming week. But it will all depend on Fed Chair Powell's commentary at the Jackson Hole Symposium. Each year, central banks from around the globe gather at Jackson Hole Symposium in Jackson Hole, Wyoming. It's always an important meeting that our Fed has used in the past to signal policy changes and the longer-term outlook for Fed fund rate. Meeting kicks off on Thursday with Fed Chair Powell speaking on Friday. Everything has changed in the economy since that meeting, except for the Fed. Back then, the Fed funds rate was 5.25 and 5.5, and it's still there today. Meanwhile, inflation has moved much lower. Unemployment rate has increased by 0.8 of a percentage point. In 2023, core PCE 4.3%, core CPI 4.7%, unemployment rate 3.5%. Now at the meeting, 2024, core PCE 2.6%, core CPI 3.2%, and the unemployment rate is 4.3%. We know that the weakness in the labor market is something the Fed is focused on and will likely determine whether the Fed cuts by 25 basis points or 50 on September 18th. Remember, 25 basis points is just an easy way of saying 0.25%. 50 basis points is 0.5%. It's just an easy way of dealing with the numbers. They'll have additional jobs data to go off as the BLS will release their benchmark revisions on Wednesday at 10 a.m. The revisions. This will show revised data up until March of 2024. And while it's old and probably not market moving, it will let the Fed know more detail on how strong or weak the labor market really has been. Goldman Sachs estimates that the Bureau of Labor Statistics revised their figures down by 600 to 1,000 to 1 million jobs, which would be significant and show that the jobs market is even weaker than previously thought. Has anybody told you that the market is a little bit weaker than they've been previously telling us? Or
Surprise!
is it a big surprise? Also on Wednesday, the quarterly census of employment and wages, QCEW, will release their preliminary job revisions figures for the first quarter of 2024. This too will likely show that the Bureau of Labor Statistics continues to overstate the job growth. Biggest report of the September 18th Fed meeting will be August jobs report, which will be released September 6th. If the unemployment rate remains at 4.3% or moves higher, the Fed will likely be pressured to cut 50 basis points. If it comes back to 4.2 or 4.1, the Fed will likely go with a 25 basis point cut. Of course, the job revision data from the Bureau of Labor Statistics and QCEW can also play a role and could let the Fed know if they're behind the curve as well. I think we've probably done a good job of that before, already. So we were the first ones to signal the Fed rate cuts had to come from the employment side of the Fed's mandate. Last year, we mentioned that we broke down last year's Jackson Hole meeting and said that we'll need to see weaker jobs data for the Fed to change their stance and cut rates. Fast forward to today, the unemployment rate has risen unexpectedly to 4.3%. Now everyone is keying in on the idea that the Fed will have to cut based on the labor market. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Borrow Smart segment today. That's what we're going to chat about. Understanding mortgage rates. Why you're seeing different rates. Why is it that I just shared with you that the 30-year fixed rate is 6.478? There are a few lenders that will actually use numbers like that. Most of the lenders are going out, and banks will call it either 6.5 or 6 3/8. There are some lenders that actually will do 6.47. Okay, they just like to use it as a little bit of a ploy. But let's understand mortgage rates, why you're seeing different numbers. When shopping for a mortgage, you've probably come across a common scenario. The news reports a national mortgage rate of 6.5%. We're just using round numbers. But when you receive a quote, the rate is closer to 7%. It's a discrepancy that leaves many potential homeowners scratching their heads. Understanding why this happens involves delving into the nuances of mortgage rates, how they're reported, and what factors influence the rate you're ultimately offered. So let's look at the basics of mortgage rates. Mortgage rates are the percentage of interest charged on a home loan. These rates are influenced by various factors, including the borrower's credit score, loan amount, down payment, and the type of loan. The rates you see reported in the media are often average rates based on ideal borrower scenarios and may not reflect the rate you'll receive based on your unique financial situation. Why is the rate you see isn't the rate you get? The mortgage rates reported in the news are typically based on national averages or the lowest rates available under optimal conditions. These conditions assume a borrower with an excellent credit score, a substantial down payment, and a standard 30-year fixed rate mortgage. However, most borrowers don't fit this perfect profile. Here's why the rate you're quoted may be higher. Number one, credit score. Lenders assess your credit worthiness by reviewing your credit score. Borrowers with higher credit scores are viewed as less risky and therefore are offered lower rates. Conversely, if your credit score is lower, lenders may charge a higher rate to compensate for the perceived risk. Loan to value, acronym LTV. The LTV ratio compares the loan amount to the appraised value of the property. A lower LTV ratio, meaning you're putting down a larger down payment, typically results in a lower interest rate because the lender is taking on less risk. Number three, loan amount and type. Jumbo loans, loans that exceed the conforming loan limits set by Freddie Mac and Fannie Mae, often carry higher interest rates due to the increased risk to the lender. Similarly, adjustable rate mortgages, known as ARMs, might have a lower initial rate that could increase over time, while fixed rate mortgages lock in a rate for the duration of the loan. Number four, points and fees. The rates advertised by lenders or in the news often assume that you'll pay discount points to lower your rate. A discount point is a fee paid up front to reduce the interest rate, with 1 point typically costing 1% of the loan amount. Without paying these points, your quoted rate will be higher. So what is the role of discount points? Discount points allow you to buy down your interest rate by paying a portion of the interest up front. For example, if you have the option to pay 1 point, which is 1% of the loan amount, to reduce your interest rate by 0.25%, you must evaluate whether the upfront cost is worth the long-term savings. The decision to pay points depends on factors like how long you plan to stay in the home and your cash flow needs. So here's a scenario. If the national rate is 6.5% and you're quoted 7%, part of the difference might be that 6.5% assumes you're paying points. If you choose not to pay points up front, your rate could be closer to 7%. Let's understand rate locks and market fluctuations. Mortgage rates fluctuate constantly due to changes in the financial markets. Economic indicators such as inflation, employment rates, and the Federal Reserve policies all impact mortgage rates. This volatility means that the rate quoted to you on one day might change by the time you're ready to lock in your loan. That could be the same day, it might be different, or another day. When you receive a mortgage quote, it's important to understand whether the rate is locked or floating. A rate lock guarantees the rate for a specific period, typically 35, 40, or 60 days. If you lock in your rate, you're protected from increases during the lock period. However, if rates drop, you may miss out on a lower rate unless your lender offers a float down option, which allows you to take advantage of a lower rate if the market improves before closing. Comparing quotes and the importance of APR. When comparing mortgage quotes, it's essential to look beyond the interest rate and consider the annual percentage rate known as the APR. The APR includes both interest rates and any points or fees, giving you a more accurate picture of the total cost of the loan over time. For example, two lenders might offer the same interest rate, but if one lender charges higher fees, the APR will be higher. The APR is a valuable tool when comparing loans because it reflects the true cost of borrowing, including all associated expenses. The impact of economic conditions. Economic conditions play a significant role in determining mortgage rates. For example, when the Federal Reserve raises interest rates to combat inflation, mortgage rates often rise in response. Conversely, during economic downturns, the Fed may lower rates to stimulate borrowing, leading to lower mortgage rates. The Federal Reserve does not control mortgage rates, but they help with the conditions. It's also important to consider the broader economic outlook when deciding on a mortgage. If experts predict that rates will rise in the future, locking in a new rate now might be beneficial. On the other hand, if rates are expected to drop, you might consider an adjustable rate mortgage or plan to refinance later. How lenders tailor rates to your financial picture? When you apply for a mortgage, lenders assess your financial situation to determine the appropriate interest rate. These assessments include reviewing your credit history, income, debts, and assets. Lenders use this information to gauge your ability to repay the loan and to set a rate that reflects the level of risk they're taking on. Another example, a borrower with a stable job, low debt-to-income ratio, solid savings account is likely to receive a lower interest rate than someone with fluctuating income and a higher debt levels. Lenders also consider the type of property being financed. Primary residences typically qualify for lower rates than investment properties or second homes, as lenders view owner-occupied homes as less risky. Refinancing, planning for the future. One strategy that many borrowers overlook is the potential to refinance their mortgage in the future. If you're concerned about being quoted a higher rate today, it's worth considering whether refinancing might be an option down the line. For instance, if rates are projected to drop in the next 12 to 24 months, you might opt for a mortgage that minimizes upfront costs, knowing your plan to refinance when rates decrease. Some lenders will offer no-cost refinancing options, which allow you to refinance without paying new closing costs, making it easier to take advantage of lower rates in the future. Again, working with a mortgage professional, navigating the complexities of mortgage rates can be overwhelming, which is why it's crucial to work with a knowledgeable mortgage professional. They can provide personal advice based on your financial situation, helping you understand the full picture, not just the rate. Your mortgage professional can also guide you through scenarios that compares different rates and terms, helping you see how factors like paying points, adjusting the loan term, or choosing an ARM. Remember our famous safety, liquidity, and return concept, how it all impacts your overall cost. Moreover, a mortgage professional can offer insights into market trends, helping you decide whether to lock in a rate now or wait for potential changes. Their expertise ensures that you're not just getting a good rate, but the right rate for your unique situation and circumstances. Bottom line, making informed decisions, the mortgage rate you quoted is more than just a number. It's a reflection of your financial profile, the type of loan you're seeking, the current economic environment. While it's easy to focus on headline rates, it's essential to consider the full scope of factors that influence your rate. By understanding why your rate might differ from the one you see in the news, you can make informed decisions that align with your financial goals, whether you're buying your first home or refinancing an existing mortgage. Work with a trusted mortgage professional ensures that you're not just getting a competitive rate, but the best possible mortgage for your needs. In the end, the goal is to secure a mortgage that supports your financial well-being, both now and in the future. With the right guidance, you can navigate the complexities of mortgage rates and confidently move forward on your path to home ownership. That is the Borrow Smart segment, brought to you by rsrhomeselect.com, rsrhomeselect.com. When we come back, how mortgage rate changes impact your home buying power. We'll talk about it. What credit scores do you need to buy a house and more? Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com. Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
We're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. How mortgage rate changes impact your home buying power is our subject. If you're thinking about buying or selling a home, you've probably got mortgage rates on your mind. That's because you've likely heard that mortgage rates impact how much you can afford in your monthly mortgage payment, and you want to factor that into your planning. Here's what you need to know. What's happening with mortgage rates? Mortgage rates have been trending down recently. While that's good news for your home buying plans, it's important to know that rates can be unpredictable because they're affected by many factors. Things like the economy, job market, inflation, and decisions made by the Federal Reserve all play a part. So, even as rates go down, they can still bounce around a bit based on new economic data. As Odetta Cushy, Deputy Chief Economist of First American, says, quote, the ongoing deceleration in inflation, coupled with the Federal Reserve's recent indication of potential rate cuts in 2024, suggests an environment supportive of modest declines in mortgage rates. Barring any unforeseen circumstances and resurgence in inflation, lower mortgage rates could be on the horizon, but the journey towards them might be slow and bumpy, unquote. How do these changes affect you? When mortgage rates change, it affects how much you pay each month. Rate change can make a big difference to your monthly bill. Take a look at the chart that we're showing you. If you're watching us on RonSiegelRadio.tv, any of our socials, ABC News and Talk AM 1490 or FM 98.1 video feeds, you're seeing how different mortgage rates impact your house payment each month for various loan amounts. Imagine you can afford a monthly payment of $2,600 for your home loan. The green part in the chart shows the payment range or lower based on varying mortgage rates. Again, all you have to do is look at that chart. You'll be able to see the numbers, and you'll see that for that, what did I say, $2,600 payment, well, at 5.75, you're looking at $440,000 in purchasing power, but at 7.5, you're looking at $360,000 in purchasing power. See how that changes? Big difference. How can you keep track of the latest run rates? Well, real estate agents have the expertise to help you understand what's happening and what it means for you. You can get the rates, or you can take a look on what your purchasing power is. Just get the mortgage calculator. RonIsMyLender.com. RonIsMyLender.com. You get that mortgage calculator for free. Real estate agents have the expertise to help you understand what's happening and what it means for you. They can provide tools and visuals like the charts I shared to show how rate changes impact your buying power. You don't need to be a mortgage expert. You just need a professional by your side, someone who can help you make sense of the market and guide you through your home buying or selling journey. Bottom line, if you have questions about the housing market, give me a call, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Remember that is the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. So in the Your Credit Matters segment today, being brought to you by rsrdebtfree.com, I think it is, rsrdebtfree.com, Your Credit Matters segment. What credit score do you really need to buy a house? When you're thinking about buying a home, your credit score is one of the biggest pieces of the puzzle. Think of it like the financial report card that lenders look at when trying to figure out if you qualify and which home loan will work best for you. As the mortgage report says, quote, good credit scores communicate to lenders that you have a track record of properly managing your debts. For this reason, the higher your score, the better your chances of qualifying for a mortgage, unquote. The trouble is most home buyers overestimate the minimum credit score they need to buy a home. According to a report from Fannie Mae, only 32% of consumers have a good idea of what lenders require. That means nearly 2 out of 3 people do not. So here's a general ballpark to give you a rough idea. According to Experian, quote, the minimum credit score needed to buy a house can range from 500 to 700, but will ultimately depend on the type of mortgage loan you're applying for and your lender. Most lenders require a minimum score of 620 to buy a house with conventional mortgage, unquote. 580 for FHA is something you can generally look at. Again, there are different guidelines, but there are overlays is what the lenders will actually use. Basically, it varies. So even if your credit report is not perfect, there are still options out there. FICO explains, quote, while many lenders use credit scores like FICO scores to help them make lending decisions, each lender has its own strategy, including the level of risk it finds acceptable. There is no single cutoff score used by all lenders, and there are many additional factors that lenders may use, unquote. If you want to get your true FICO score, go to cleanall3.com, cleanall3.com. And if your credit score needs a little TLC, don't worry. Experience says there are some easy steps you can take to give it a boost. Include, number one, pay your bills on time. Check out our video that we've done on this, rsrccpayment.com, rsrccpayment.com. Lenders want to see that you can reliably pay your bills on time. This includes everything from credit cards, utilities, and cell phone bills. Consistently, on-time payments show you're a responsible borrower. Number two, pay off outstanding debt. Paying down what you owe can help lower your overall debt and make you less of a risk to lenders. Plus, it improves your credit utilization ratio, how much credit you're using compared to your total limit. A lower ratio means you're more reliable to lenders. Number three, don't apply for too much credit. While it might be tempting to open more credit cards to build your score, it's best to hold off. Too many new credit card applications can lead to hard inquiries on your credit report, which can temporarily lower your score. Bottom line, your credit score is crucial when buying a home. And even if your score isn't perfect, there are still pathways to home ownership. Give us a call at 800-306-1990, 800-306-1990. We are always ready and willing to help put you on a game plan to get those scores corrected. That is the Your Credit Matters segment brought to you by rsrdebtfree.com, rsrdebtfree.com. And remember, our friends over at Blue Water Credit are more than willing to help you get those credit scores improved if it's necessary. And you can go to know what your scores are. Don't remember, the scores that you see in most places are not true FICO scores. Credit Karma, Credit Sesame, Experian, when you get one from your banks, more often than not, those are not FICO scores. Those are credit scores. Vantage scores. Experian will put out a score, but it's not a FICO score or it's not a mortgage FICO score. You got to go to places like cleanall3.com, myfico.com. Those are the stores. I like cleanall3.com. And monitor your credit. I do. I get a notice probably every day at least about changes to my credit score, my credit report. Now, in full disclosure, I will let my score go down and my score go up, knowing when I need to use it, just so I can see what some of the effects of doing certain things will have on the score so that I can report them to you, because FICO doesn't tell everybody exactly what the numbers are. But I will tell you, everybody should be going and reviewing rsrccpayment.com, rsrccpayment.com, so you can get a good handle on how to pay your credit card bills the right way for FICO scoring purposes to maximize that FICO score. rsrccpayment.com. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, where will you go after you sell your house? We'll talk about helpful negotiating tactics for today's housing market, all that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at RonIsMyLender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037. RonIsMyLender.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, real-time real estate segment. Brought to you by rsrmoney.com, rsrmoney.com. Where will you go? I'm sorry, I wanted to do this one for helpful negotiating tactics for today's housing market. If you haven't already heard, home buyers are regaining some negotiating power in today's market. And while it doesn't make this a buyer's market, it does mean buyers may be able to ask for a little more. So sellers need to be ready for that possibility and know what they're willing to negotiate. Whether you're looking to buy or sell a house, here's a quick rundown of potential negotiations that may pop up during your transaction. That way, you're prepared no matter which side of the deal you're on. What can you negotiate? Most things in a home purchase are on the negotiation table. Here's a list of just a few of those options according to Kiplinger and Lending Tree. And again, if you're watching us on RonSiegelRadio.tv, any of our socials, or ABC News and Talk, AM 1490, FM 98.1 video feed, you're seeing things you can negotiate during a home sale. Sale price. Most obvious is the price of the home, and that lever is being pulled more often today. Buyers don't want to overpay when affordability is already so tight, and sellers who aren't realistic about their asking price may have to consider adjusting their price. Home repairs based on, hey, don't forget, if your sales price, rsrlinks.com/salesmax. rsrlinks.com/salesmax. Make sure you're looking at that. rsrlinks.com/salesmax. Home repairs based on inspection. A buyer is within their rights to ask the seller to make reasonable repairs. If the seller doesn't want to do that, they could offer to reduce the home price or cover some closing costs so the buyer has the money to take them on themselves. Fixtures. Buyers can also ask for appliances or furniture to convey when the house changes hands. Having the seller throw in the washer and dryer cuts down on expenses the buyer would have when is moving in. As the seller, you could leave your existing ones behind to sweeten the deal for your buyer and get yourself new ones for your next place. Closing costs typically run about 2 to 5% of the home purchase price, Buyers can ask the seller to pay for some or all of these expenses to offset the cash the buyer has to bring to the table. Home warranties. Buyers can also ask the seller to pay for a home warranty. This is great for buyers worried about the maintenance costs that may pop up after taking possession of the home. And since this concession usually isn't terribly expensive for the seller, it can be a good option for both parties. The closing date. Buyers can ask for a faster or extended closing window based on their own timetable. The seller can also advocate for what they need based on their move to the right to the compromise. One thing is true, whether you're a buyer or a seller, that's how much your agent can help with thought out. Where's my thinking today? That's how much your agent can help throughout the process. Your agent is your go-to for any back and forth. They'll handle the conversations and advocate for your best interests along the way. As Bankrate says, quote, agents have expert negotiating skills. Without one, you must negotiate the terms of the contract on your own, unquote. They may also be able to uncover what the buyer or seller is looking for in their discussions with the other agent, and that insight can be really valuable at the negotiating table. This is why I always suggest, don't use the same agent for both buyer and seller. You know, unfortunately, if you were going through a divorce, you probably wouldn't want to use the same divorce attorney, would you? Just thinking. Bottom line, buyers are beginning a bit of negotiation power in today's market. Buyers knowing what levers you can pull will help you feel confident and empowered going into your purchase. Sellers have a heads up of what they may ask for, gives you the chance to think through what you'll be willing to offer. Want to chat more about what to expect and the options you have? Give me a call, 800-306-1990, 800-306-1990. That is the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. I was going to talk to you about where you're going to go after you sell, but I don't think we have enough time to get into that one today. But I will tell you a little bit about a program that our friends over at Geneva Financial have. It's called the Transition Loan. And if you want more information about the Transition Loan, just hit us up and we'll let you know about it. But basically, the Transition Loan is for those people that are looking to sell their house and do not want to be homeless. What's that mean? Well, right now, houses are still selling in many parts of the country very, very quickly if they're priced properly and marketed properly. How do you market them properly? rsrlinks.com/salesmax. rsrlinks.com/salesmax. Remember that agents work for commission. When you lowball the commission, agents don't work as hard. I mean, just think about that. If someone said to you, I'm going to take 60% or 30% of your salary away, are you going to be real happy about that? Are you going to work as hard? No. Real estate agents are the exact same. They want to get paid. How do you make them work harder? Pay them more. rsrlinks.com/salesmax. rsrlinks.com/salesmax. But I digress. The Transition Loan. So what this does is it looks at the equity you have in your existing property, your departing property. How much is the cost of your acquisition? The Transition Loan goes in and says, okay, we're going to look at those two. We'll take in a few other factors, and we're going to lend you based on the equity of your departing property, basically the total amount of the liens, the collateral, which is both properties. So they're going to pay off the liens on the departing property. They're going to put a lien on both properties, and they're going to give you the money based on the loan to value that you qualify for. Probably 60 or 65% of the value of both properties. Remember, they got to pay off the existing liens out of that money. But that gives you the money to go and buy the new property. Generally, it can be done in 10 days to 2 weeks. Why is that important? Well, you might be able to compete with cash buyers on the other side, on your acquisition. So now you own the acquisition, you own the departing property, now you have to sell the departing property, so you're not homeless in the interim. That's the whole idea of it. That's the transition loan from our friends at Geneva Financial. Again, if you want more information on that, give me a call at 800-306-1990, 800-306-1990. And as always, we ask that that first radio preset button to come back and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or any comments, give me a call, 800-306-1990, 800-306-1990. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.